Alright, so I'm gonna do a trade breakdown of the two trades that I've taken this week, right? So I've taken a Euro USD short and I've taken a gold short. So we'll go over those two trades, right? Crazy moves on DXY today, but yeah, as you can see here, we had this massive range, right? We started to consolidate on the daily time frame, took out the range highs, came back, took out the range lows, and for this week, right, I wanted to see a bullish weekly candle, which we got here, right? Because as you can see, we have this weekly fair value gap, and we have this daily range. We have this daily fair value gap, and we have this low engineered. So we swept this low on Friday into that daily fair value gap, closed back inside the range. So I wanted to see Monday to be a continuation candle, and then if we can get confirmed that, we can expect the next few days to be also a continuation towards the draw liquidity, which was this previous week high, right? So what we had here, we had this accumulation and manipulation of the range lows into a daily bullish key level and bullish high time order flow, and then we got this reversal, right? So we had this inversion fair value gap, right? I wanted to see price use that as a key level to push up higher from, right? Which is what we got, right? We came back into it and then we saw displacement away, which confirmed this 4-hour order block on on DXY, and then on the next day I wanted to use this fair value gap and this order block to see a continuation higher, which is what we got, right? And on this day I managed to align on my euro shorts bias. So yeah, we'll quickly go on to euro as well. Same thing on euro, right? On the daily time frame, I was expecting a bearish weekly candle, right? Because on Friday we swept all these highs, all these daily highs into this daily imbalance, which is also this weekly fair value gap. And then we saw Monday to be to offer this 3-bar swing, right? So usually when we confirm a 3-bar swing, swing point formation, whatever, you can usually anticipate the next daily candle and even the day after that to be continuation candles, which is what we got, right? Towards the draw liquidity. So if we go into the 1 hour time frame, same thing here, right? So we swept all of these highs into that daily fair value gap, rejected, and we formed this inversion fair value gap, which is the key level I wanted to see for price to form the high of the day, right? We came into it on Monday in London session, but I didn't like the way we pushed into it, right? So I wanted to see price to accumulate and then give a manipulation higher and then something like this, right? But we formed a range down here and then we saw a massive push up higher and closed above 50% of the key level. So at this point I was thinking we might keep ranging, or we might just go for the previous week high before rejecting, which is also a possibility, right? But yeah, I waited for New York session and then we started pushing down lower, but again I didn't want to short this with my stops above here, so I just waited for the daily candle closure and then heading in towards the daily towards New York session. Massive moves lower, large imbalance forms, so I wanted to look for a continuation the next day, right? So this bearish dealing range, we have this range high to this range low, and then you just want to see price to accumulate here into the premium of the range and then look for shorts towards the range lows again. So that was the game plan for me. That was the game plan for me. Nice power free AMD, whatever. So yeah, we got that right. I just wanted to see accumulation, manipulation, and then distribution. It's a clear high of the day to form inside of a high time from key level, which for me was this hourly fair value gap right at the time. And then yeah, you look to go short once we get that confirmation of the high of the day. So on Tuesday, we had this range. Manipulation above the range high, and if I'm being honest, this is way not way too deep, but this manipulation I was not really expecting, right? I wanted to see like price push up and then come back lower straight away. And the fact that we inverted this whole fair value gap, right, even closed above this whole down move with this down close candle, which was the was not really a good sign, right? But for me, the reason that I was still looking for shorts is because firstly, we're above the daily open. Secondly, we are also tapping this 4-hour order block, right? So as long as we don't disrespect this bearish dealing range that we have, right, it's still valid to look for shorts from this bearish order block, even though we've disrespected this fair value gap, even though that's not ideal. But yeah. And then thirdly, if you can see from this candle, right, this to me looks like a manipulation candle, because this candle here is a flat open. Flat opens usually tend to be manipulations, right? Price tends to come back for this candle. So if a candle opens with no wick to the downside and just pushes up straight higher, then usually you can anticipate price this to be some sort of manipulation, which I'm assuming was some sort of Trump news. To be honest, I'm not really sure what it was, but that's what I'm assuming. But yeah, price will tend to usually come back for these lows, right? They can act like some sort of withdrawal liquidity. So I was anticipating this to be a deeper manipulation. And then what I was looking for here, right, is if we could confirm this fair inversion, then this would confirm the high of the day for me, right? Because we've pushed up higher, swept the highs one more time, and then started dropping lower. So if we close above this, below this, then that should confirm the high of the day, right? Come back into the range. Ideally even close above this whole up move, because then this would be the bearish order block, and then you can just short something like this, right? It stops up here and validation there, TP down here, you get a 2-hour trade. But we didn't get that, right? We ended up rejecting this fair value gap, pushed up higher one more time, sweeping these London highs here in New York. So we had a New York reversal profile into the high time frame key level, above the daily open with a high time frame bearish bias, expected open high low close day, right? And we still have all these lows intact. So for me, the bias was still valid, right? Narrative still made sense to see lower, even though we have seen a deeper manipulation than usual. And this was even more high probability, right? Because there's two types of reversal I look for, right? If we have a range, we push up higher, you usually want to see price to give a fast reaction, right? Have a fair value gap that just gets inverted, and then that would be like your high probability reversal, right? So like this one, for example, we have the range, push up higher, and then we immediately reverse this move down, inverted this fair value gap. Then that's the first high probability reversal, right? But then the second one, which I actually do prefer more, is if we range, push up, retrace, take out the high one more time, and then we dump. Then this one's even more high probability, because you're seeing multiple stop runs, right? And usually if you look at reversals, it's either this one or this second one right here, right? You'll usually see some sort of another run on stops to stop the early shorts from here, right? And then you see that drop down. And this also comes with you also get a market structure break, you'll get the order block, and you'll get a breaker. And then if there's an inversion below this as well, for example, say that there's a fair value gap right here as well, if price disrespects the inversion, that's my favorite entry model that I like to use, right? Because price is forming two bearish PDRAs and is also disrespecting the bullish PDRA at the same time. So yeah, that just makes the entry model even more high probability, right? So you'll see what I'm talking about in a second. So price using this fair value gap to push up higher, take out the highs one more time, and then we start to see the sell-off, right? Then at this point, you can use the hourly time frame, but when the 15-minute is cleaner, you like to use the 15-minute. Like for example here, you can't really use the 15-minute time frame because you want to wait for price to close through this whole fair value gap, right? And then at that point, you might as well just use the hourly time frame. You might as well wait for the hourly candle to close below the inversion, this fair value gap. But because we pushed up one more time, right? You want to look for your confirmation from this leg up higher, right? This impulse move. So from this low to this high, this would be the range that you want to look for your entry confirmation. So from this push up higher to run the stops one more time, what did we form? What PD arrays have we formed in this move up, right? We formed this this down close candle, which is a bullish order block, and we close below it, right? So once we close below these two up close candles, if price is bullish, right, you want to see price to retrace into this even after taking out the highs. You want to see price retrace into this and then give another leg up higher, right? You don't want to see price to disrespect a bullish order block in bullish high time frame order flow, because that suggests that price might be switching order flow to bearish, right? So that's the first sign, right? So we disrespect this bullish order block and we closed also below this up close candle. So what does this entail? This becomes a bearish order block, right? So that's the first thing, right? Second thing is you want to see price to close below this low, because then that would be a bearish market structure break. If we close below this low, right, then that's a reversal pattern, and then we can expect a continuation lower from there, right? Especially if it happens at an area of price where we expect a reversal. So that's the second thing. And now the third thing is we have below this low, we have this fair value gap. So what do you want to see to confirm that price this is not a stop run, right? Because sometimes if price is in bullish order flow, eventually price is going to come lower to sweep some of these lows, because of liquidity, right, as a stop run to go up higher. So high probability bullish continuations would have some sort of something like this, right? Price is just pushing up higher. Say we leave a fair value gap here, right? Price would come sweep this low into the fair value gap and then give a bullish continuation higher, right? So say there's a fair value gap here below this low, price will come sweep it and then push up higher. And if you're bullish, then you would want to long something like this, right? Because then you have a proper invalidation. But if price is bearish, what do you want to see? You want to see the complete opposite, right? You want to see these levels getting inverted. So say if your bullish bias gets invalidated by price disrespecting the low and the fair value gap, then what does that entail? Price is actually bearish, right? So say there's a fair value gap and we disrespect this low, then that more likely suggests that price is bearish, especially if it happens at a reversal, a point in area, in price that we expect a reversal. So essentially we got that right. We've disrespected two bearish PD arrays, being this these down close candles and this fair value gap, and then we've also formed the bearish order block at the same time. So this is suggesting to me that okay, we're in bearish order flow, right? We're likely going to sell off. We've had multiple sweeps in the day. We're trading above the daily open into high time from key level. We're expecting a bearish daily profile, so we can expect price to just sell off here, right? And if you look at from this dealer range low to the dealer range high, what other PD arrays are inside of this bullish range that could send price higher one more time? Once we disrespect the fair value gap, there's not really any other PD arrays. We just have this range right here. So at this point, once this fair value gap gets broken, that's pretty much the make it or break it level for price to remain bullish here. So once we violated this, at this point, it's obvious price is going to come for the minimum these lows, right? And then we just have to hope that these bullish key levels, bearish key levels, hold it and stay intact, right? And then we see a continuation lower. So as soon as we disrespected the fair value gap and we broke structure to the downside, confirming this New York reversal, forming these new bearish PD arrays and 15-minute time frame, that's when I went short, right? So I shorted shorted here, validation at the high of the day, and then if you look at how the hourly time frame closed as well, we also inverted the small imbalance, and we've almost closed above these up close candles, forming an hourly bearish order block as well. So next hourly candle comes up into this inversion, and then we get the sell off, right? And then to me, this is the clear high of the day profile, you know, accumulation, manipulation, and then now we're in the distribution phase of the daily candle, and now we can anticipate expansion lower into this low, and then yeah, nice displacement towards the noon, a bit out of session, but yeah, you know how the chart market is nowadays. You usually tend to see expansions heading into the daily close now. So yeah, towards the daily close we saw a bit of expansion, retraced back into this fair value gap, and then at this point I wanted to see if we can get a nice range to form here, and then we have this high that's engineered with this imbalance. If we can sweep it, then I would also probably look to scale in, right? So I even had a limit on another account to short this here with my validation up here. At this point, once we pushed all the way down here, I pretty much moved my stops to break even, right? Because there's no reason for price to get above this inversion fair value gap anymore, right? If price disrespects this fair value gap and then gets above this inversion all the way to my entry, then price is likely in a range, and it might come from my stop loss again, or price is just somehow flip bullish before even taking out this low. So Monday low was the first TP for me, right? And then we had these higher time frame equal lows, which was the second TP for me, right? But yeah, what happened was on the next day we left these equal highs, sold off straight to the Monday lows, and this at this point this is a reversal area, right? So I made sure to pretty much, and I was up around 3.8R, so I pretty much TP'd on majority at this low, right? And then I held a runner for this low right here, or this low, sorry. So around almost 5R trade, I TP'd around here, and at this time on price, right, I wanted to hold all the way for this low, right? But if you look at DXY at the time, this is DXY towards London close. We or sorry, not London close. Towards the end of London close, we took out the previous week high, right, which was this high right here. Took out this high, and then at this point at 12, 8, 9, 10, 11, 12. Yeah, this at this point, once price was trading down here around 12, that was literally where I closed the trade, right? So I pretty much bottom ticked my close right here because DXY is trading at the previous week high. So we know that DXY and Euro are go in line with each other, right? So if DXY takes out the higher time frame drawn liquidity, you can expect you can basically assume that Euro is also taking out the drawn liquidity, right? Because if DXY takes out the drawn liquidity and reverses, then Euro is also going to reverse before taking out these lows. So that's why you have to really be that's why it's really crucial to make sure that you time your profits in line with DXY, right? But yeah, even the Monday lows right here was enough for me, right? That's almost a 4R trade just on the Monday lows by itself. And if you look at the high time frame profile, we're in this range in market, right? So price takes out the Monday lows, but you want to be greedy and hold for 7R for these lows, for the high time frame lows here, right? Then in this market condition, even a 4R in this market condition is very hard to get, and you might as well just take what you can get. So TP majority there, left a runner for the high time frame drawn liquidity. Once DXY hit the high time frame drawn liquidity at this point, because Euro is a bit stronger than the was a bit strong at the time, right? That's why DXY took out the high before DXY Euro took out the low. You want to just take your profits at that point. So to close everything here, and imagine if I didn't, right? Because if I didn't, then I would have got taken out break even to the pip, and then price would have dumped again. I wouldn't actually have taken out. Maybe spreads probably would have taken me out, to be fair. But yeah, I would have pretty much got taken out up to the pip on Euro there, right? And then price would have dumped, because price swept these lows, this low and this low, into this imbalance, and then gave that reversal, and then came back for these equal highs, which I wanted to see price to give an open high low close the next day, which it didn't. It just dumped straight to the lows. Came back for these highs one more time, dropped, and then I don't know what today was, but we had another push up higher, left SMTs with DXY, right? DXY took out this low one more time into this 4 hour propulsion block, right? We had this order block, price comes into this order block, push up higher. This is the propulsion block. We had this low, price pushed up higher, comes back for this low one more time, and then NFP today, right? Straight up distribution candle. So yeah, now that we've closed back out of the range with NFP today, it looks pretty obvious that the bias is to assume that euro is going to come and take out these lows now, right? But yeah, managed to book my 4R on euro this week, and that's how I managed to do it inside of this range, right? Is always your idea on the lower time frames is always based off your higher time frame bias. So because I had a bearish weekly bias and I was expecting bearish daily candles to follow up, right? That's how I managed to catch shorts. Even if you see moves like this, right? Price looking bullish. Oh, we inverted this fair value gap. Oh, we pushed up higher, formed a bullish fair value gap. Let me go long. Is always based off your expectation of your daily bias, and I was expecting a bearish daily bias, so I was only looking for shorts, right? And as long as there's a clear narrative, right? Equal lows, high time frame key level was this. We've swept all these current session highs, AMD framework, New York reversal profile, London lows, Asia lows intact. Then you can only look for shorts at this point. There's not really any long framework here. You know, this is high resistant, this is low resistant. So yeah, always want to frame your trade ideas not based off a lower time frame, and always based off the higher time frame. So yeah, just a lesson in that. Also a lesson in taking profits, because I know some people probably got greedy and try to leave profits for here, and then they've got stopped out at break even, and now price dumps. So that's also another lesson to take into consideration, right? And then we'll quickly go over gold, right? Gold, same framework, right? On the daily time frame, we have this daily fair value gap, right? And we have these daily equal lows. So the bias is clear. High time frame on the daily is bearish, right? With equal lows. So all you want to see is manipulation to a daily key level, and then some sort of displacement, and then you can get in line with shorts. So that's all you had, right? Same thing on euro, same thing on gold. Daily manipulation into a key level, displacement lower. We had this inversion fair value gap, and then we came back all the way into it, and then we sold off again, right? We had some trend line liquidity highs that were formed on the way. We came up and swept those, and then at this point you don't really expect this high to get invalidated, right? Once we invert these fair value gaps after running these highs, you don't really expect price to get back above these inversion fair value gaps. So I did miss the shorts here, right? Because you could short this, right? Put your validation here, and then you could TP at these lows. I wasn't actually watching gold until price was down here, and then gold managed to sweep this low and then push up higher again and then sell off. So even if I took this, I probably would have got stopped out of break even, because I would have gone break even after price took out the Monday lows. But I was still expecting bearishness, right? Because we have a clear narrative behind looking for shorts, and a bias, a strong high time frame bias, right? Daily key level manipulation, equal lows. So my narrative to look for shorts, right? We'll go over it. We have this 4 hour order block. You can also say is a propulsion block, right? We have these up close candles, close below it. This is your order block. Price comes back into it, sells off. This is your propulsion block, right? We have these We also have an inversion fair value gap, right? But the order block was the main focus for me, right? So you have this order block. We have context behind this order block as well, right? And then price comes into the order block, and then on this day I wanted to see a nice AMD, right? Daily power free open high low close framework, right? So on Thursday, so the daily opens around here, right? Daily pushed up higher. We opened up. So now at this point we're trading above the daily open, right? At this point, coming to the high time from key level. On the daily, we also have this bearish order block, right? These two upclose candles, we closed below it, so this daily order block. So we traded above the daily open into that daily and 4-hour order block, right? We had this range manipulation of the range. We swept all of these the previous session highs into that key level. So all I was looking for was confirmation, right? And if I'm honest, I didn't really like that we didn't have this manipulation inside of the session, which is a sign that threw me off a bit. But if we confirm the hourly order block, then I would have that would have been a good enough confirmation for me to go short. But ideally I wanted to see one more push up higher before we sold off, right? So we pushed up higher and then we sold off, right? On 15-minute we inverted these fair value gaps, these three imbalances. Kind of similar to euro, but instead we we got that V-shaped reversal, right, where prices ranging, and then we get something like this, and then we only invert the imbalances instead of another sweep of the high, which is a bit lower probability, but it's fine. And then on the hourly time frame, we close below this down close candle, which is the breaker, and we close below this up. We close below this up close candle, which is the bearish order block. So at this point, I shorted the next hourly open high low close, and then my validation was the pre-London highs, and then my TP was all the way down here, right? So it was around 5R. I took this with lower risk as well because I didn't like how the invalidation was the pre-London highs, right? And also, even though we confirmed this bearish order block on the hourly time frame, there was a lack of displacement at this point, so I didn't really like it too much. But also I was up around almost 4R this week from the euro shorts alone, so I wanted to de-risk here and not expose myself to too much risk. Plus this is also pre-NFP as well, right? So if price just chops around and cooks me, then I don't want to lose too much. Also, you can see gold has been in a disgusting range for a while, right? So I don't want to get cooked in some fuckery, right? But yeah, once we confirmed the order block, I went short here, and then I was anticipating a price could come up, right, one more time to sweep the pre-London highs before going short. And if we did see that, then I would take a re-entry, right? And that's what happened. But because of how this hourly candle closed, this is indicating we're more likely bullish after sweeping these lows. So I didn't look for further shorts at this point. But then also I'm not looking for further longs because we have equal lows on the daily time frame and daily order flow is bearish, and this is high resistant liquidity. So longs are low probability, and then shorts were also low probability after this hourly closure. But then what happened is we ended up just sweeping these highs back into this inversion fair value gap, and this 4-hour inversion as well. Ended up respecting it, went lower, and I was considering taking this entry, right, because this was valid, right? We just saw one more manipulation higher above the daily open into the high time from key levels, and we got this hourly confirmation, right? So you could take this, right, validation at the New York highs, New York reversal profile. London and Asia lows are intact as well, so clear narrative, aligning with the higher time frame bias. So this would have also been a valid trade to take, right? But I just didn't feel comfortable taking it pre NFP, and price is in a consolidation as well. So I skipped this trade. But yeah, this would have been a clean 3.5 hour trade, and price even went lower than these lows. So yeah, would have been a valid trade to take a real entry, but yeah, I just didn't end up taking that at the end of the day. So yeah, ended up with this loss on gold, which is fine, but we had this massive win on euro, so I'm pretty happy with the performance this week. Could have ended it stronger with this entry here, but it's fine. I just didn't want to take any more risks pre NFP here, especially in this market condition. But yeah, very happy with the performance on, especially with how rangy these markets have been recently. So I'm very happy with the performance the last few weeks, and let's see if we can keep it up here, right? Looks like gold is kind of come and fill this this wick here, right? Maybe even come for these lows, I'm not sure. But your bias looks very clear, right? We have high time frame equal lows here. So next week, hopefully we can look for some shorts, form a daily range, a daily imbalance, sweep into the imbalance, and then sell off. That'll be the game plan for next week. So yeah, let's see if that plays out. And yeah, we'll end the recording here.